In the world of high finance, where fortunes are made and lost in the blink of an eye, few figures have left as indelible a mark as Bill Ackman, a man known for his bold moves, unyielding confidence, and the uncanny ability to see what others can't. Ackman has become one of the most influential hedge fund managers of our time. But what is it that sets him apart? What strategies does he employ to turn market turbulence into opportunity? Today on Brand Vanguard, we're peeling back the layers of Ackman's investment playbook to uncover the secrets behind his success. Buckle up, because this is a deep dive into the mind of a financial maverick. Welcome to Brand Vanguard, your go-to channel for in-depth analyses of the world's most powerful financial strategies and the masterminds behind them. I'm your name, and in today's video, we're diving deep into Bill Ackman's investment strategy, a powerful blend of activist investing, value identification, and meticulous risk management. Over the next 100 minutes, we'll explore not just the tactics but the philosophy that has guided Ackman through both his greatest triumphs and his most challenging battles. By the end of this video, you'll have a comprehensive understanding of what drives Bill Ackman's decision-making process, how he identifies opportunities, and most importantly, how you can apply some of these principles to your own investment strategy, no matter the size of your portfolio. The Rise of Bill Ackman, a journey through high finance. To truly understand Bill Ackman's strategy, we need to start at the beginning. Born in 1966, Ackman's journey into the world of finance began early. After graduating from Harvard, he co-founded Godem Partners, a small investment firm, in 1992. Godem Partners was Ackman's first foray into managing money, and it quickly made a name for itself by taking bold, contrarian positions, but it wasn't all smooth sailing. Godem Partners faced significant challenges, leading to its eventual dissolution in 2003. However, from the ashes of Godem Partners, Ackman emerged stronger, more focused, and ready to take on the world of finance with a new firm, Pershing Square Capital Management. Pershing Square Capital Management, founded in 2004, was where Ackman truly began to make his mark. His strategy of concentrated investing, placing large bets on a few high-conviction ideas, quickly garnered attention. His early successes, including significant investments in fast food giants like Wendy's and McDonald's, showcased his ability to identify value where others saw only risk. Ackman's approach at Pershing Square was characterized by deep research, a willingness to engage with management, and a focus on long-term value creation. But as we'll see, his journey was not without its controversies and challenges. The philosophy of activist investing shaping corporate America. One of the key pillars of Bill Ackman's investment strategy is activist investing. But what exactly is activist investing, and why has it become such a powerful tool in Ackman's arsenal? Activist investing involves purchasing significant stakes in publicly traded companies and then using that ownership position to influence management decisions and drive strategic changes that are intended to unlock value. Activist investing is not just about shaking things up for the sake of it. For Ackman, it's about identifying companies with strong potential that, in his view, are being mismanaged or undervalued by the market. Take, for example, his involvement with Target. Ackman believed that Target's real estate holdings were significantly undervalued and proposed a strategy to unlock that value. Though the plan was ultimately rejected by the company's board, it demonstrated Ackman's willingness to push for bold, transformational changes. Another major success story was Canadian Pacific. Ackman's campaign to replace the company's CEO and overhaul its operations led to a dramatic turnaround in its performance, with Canadian Pacific's stock price increasing substantially as a result. But not all of Ackman's activist campaigns have been as straightforward. His battle with Herbalife, where he took a massive short position and publicly declared the company a pyramid scheme, turned into one of the most high-profile and controversial activist campaigns in history. Activist investing is high stakes and often contentious, but for Ackman, it's a strategy that aligns with his broader philosophy that investors have a role to play in shaping the companies they invest in, not just profiting from them. The core of Ackman's strategy: value investing with a twist. While Ackman is best known for his activist approach, at the heart of his strategy lies a deep commitment to value investing. But Ackman's interpretation of value investing is nuanced and tailored to his unique perspective on the markets. Value investing, popularized by figures like Benjamin Graham and Warren Buffett, involves buying stocks that appear undervalued by the market. But Ackman adds a twist. He often combines value investing with an activist approach, seeking to unlock the value he perceives through strategic interventions. A prime example of Ackman's value investing strategy is his investment in Lowe's. Ackman recognized that Lowe's was a solid company with a strong brand and customer base, but believed that it was underperforming relative to its potential. By taking a significant stake in the company and advocating for operational improvements and strategic shifts, Ackman was able to help drive a turnaround that significantly increased the company's value. Similarly, the Howard Hughes Corporation presented an opportunity where Ackman's deep understanding of real estate value and long-term growth potential came into play. Ackman's investment was based on the belief that the company's extensive land holdings were significantly undervalued, and his patience paid off as the company's stock price rose dramatically over the following years. Ackman's value investing is not just about finding cheap stocks, it's about finding situations where he can actively influence the outcome to realize that value, often through a combination of strategic insight and active engagement with company management. Risk management, the art of protecting the downside in the world of investing. Even the most well-researched strategies can go awry if risks are not properly managed. For Bill Ackman, risk management is a critical component of his investment approach. While his public persona often highlights his bold and aggressive moves, behind the scenes, Ackman is meticulous about managing downside risks. Financial crisis. One of the most notable examples of Ackman's risk management was during the 2008 financial crisis. Ackman famously took a position in credit default swap CDS against bond insurers like MBIA, anticipating that the housing market collapse would lead to significant losses for these companies. This bet paid off handsomely, demonstrating Ackman's ability to protect his portfolio during one of the most challenging market environments in recent history. But risk management isn't just about making bets against the market. It's also about structuring investments in a way that minimizes exposure to potential losses. Ackman often uses options and other financial instruments to hedge his positions, ensuring that even if his primary thesis doesn't play out as expected, his downside is limited. This disciplined approach to risk management allows Ackman to pursue high-conviction ideas without exposing his investors to undue risk. It's a lesson in the importance of not just focusing on potential returns, but also on how to protect against potential losses. Deep dive into notable trade successes, failures, and lessons learned. To truly understand Bill Ackman's investment strategy, we need to examine his most notable trades, both the successes that made headlines and the failures that taught valuable lessons. These case studies provide insight into the decision-making process, the risks involved, and the outcomes that have defined Ackman's career. Let's start with JCPenney, one of Ackman's most controversial investments. In 2010, Ackman took a large position in the struggling retailer, believing that a new management team could revitalize the brand. He brought in Ron Johnson, the former head of Apple's retail operations, to lead the transformation. However, the turnaround did not go as planned. Johnson's radical changes alienated longtime customers, and the company's financial performance deteriorated rapidly. How to apply Ackman's strategies to your own investments. While Bill Ackman operates on a scale that few individual investors can match, the principles behind his investment strategy can be applied at any level. In this segment, we'll break down how you can incorporate some of Ackman's insights into your own investment strategy. Whether you're managing a small portfolio or planning for long-term financial growth. First, focus on deep research. Ackman's success is built on a foundation of thorough analysis. Before making any investment, take the time to understand the company's financials, business model, management team, and competitive landscape. Look for companies that are undervalued by the market but have strong underlying fundamentals. Next, consider the role of activism in your investments. While you may not have the influence to change corporate strategies, you can still be an active shareholder. Engage with company management through shareholder meetings and votes, and advocate for strategies that align with long-term value creation. Finally, never underestimate the importance of risk management. Just as Ackman hedges his bets and carefully manages downside risk, you should also consider how to protect your portfolio. This might involve diversifying your investments, using stop-loss orders, or even employing option strategies to hedge against potential losses. By incorporating these strategies into your own investing approach, you can apply the same principles that have guided Bill Ackman's success, helping you build a portfolio that is both resilient and positioned for growth. Today, we've taken an in-depth journey through Bill Ackman's investment strategy, exploring his rise to prominence, his activist approach, his commitment to value investing, and his meticulous risk management techniques. We've also examined some of his most notable trades, learning from both his successes and his challenges. If you found this exploration of Bill Ackman's strategy insightful, don't forget to like this video, share it with your network, and subscribe to Brand Vanguard for more deep dives into the world's most influential investors and their strategies. We'd love to hear your thoughts. What strategies from Ackman's playbook resonate most with you? Drop a comment below and let's start a conversation. And be sure to check out our other videos and playlists for more content that can help you sharpen your investment acumen. It's a reminder that the path to success in investing is rarely straightforward. It requires patience, conviction, and the courage to stand by your analysis even when the market disagrees. So as you continue your investment journey, remember to think critically, manage your risks, and most importantly, invest in your own knowledge and understanding. The financial markets are complex, but with the right mindset and strategy, they offer limitless opportunities.